This wasn't an ordinary Dow Jones trade, guys. I took this trade on Monday and it reached 22R for 22 minutes. So it was exceptional for two reasons. Reason number one is that usually Mondays they're not very volatile, therefore we don't have that many trading opportunities. Reason number two is that I have never ever taken a double-digit trade in less than half an hour. This comes to prove that actually trading is full of surprises, and this was just one of them. So let me walk you through this trade, guys. This was initially I drew the zones on all of the instruments that we are following, as you can see here in the New York session, and this was the Dow. These are the zones that I was looking at based on the higher time frames. Then this is the Nasdaq, this is the DAX, and gold. So the process is as follows. After I draw the zones, then I'm scaling down to the lower time frames, and I'm trying to look for the trading opportunities which might occur in the first 15 to 20 minutes and more rare occasions in the first 30 minutes of the trading session. Once those opportunities have been spotted, then I'm taking a trade, and this was done right here. As you can see, it's 35 minutes past 2 London time, which is 35 minutes after the market opened. And I do use limit orders profusely, so to speak. So I'm always trying to get into risk-free trades, and this is one of the major elements of the strategies a lot of you are already aware of. I'm just saying this for the people that are not really familiar with how this strategy works. And then as you can see here, the initial profits were taken very quickly. This was literally in less than a minute. I was in a risk-free trade, and then the price. Another important thing is never to move the stop loss too early. If I have moved my stop loss too early, this would have not just prevented me from taking a very profitable trades, but I would have not made any money or just small amounts on this trade, which is probably even worse than making a small amount. So this was the second trade I took, which was a Nasdaq trade, and a couple of minutes later you can see the limit was reached. So this was again less than a minute later the limit order was reached. So I was running a risk-free trade, and I let both of my trades run. So later on it only took 22 minutes where I decided to take profits on the Dow Jones trade. And as you can see here, this was where I entered the price, the trade. This was my stop loss. It's still intact, and the price has moved 22 times from the initial entry and the stop loss. So in other words, 22 times the risk on this leg, or 1 to 22 risk to reward ratio, guys. And this is where I closed the trade, as you can see with the little red arrow. This was an example of a great double-digit trade, guys, and don't be misled though, because this 1 to 22 risk-to-reward ratio is not that easily achievable in normal circumstances. So as I mentioned in the beginning of this video, there were a few different factors that led to it. Usually Mondays, they're very quiet days. You don't really see this type of performance on a Monday. The other reason is because the amount of time it took to form this trade, in other words, only 22 minutes to reach 22x trade, this was exceptional. Usually, this type of returns are achieved from anywhere from a few hours to maybe 2 or 3 trading days, depending on the market environment. And this again shows you how unpredictable are the markets, and that another reason of why you should not be relying on conventional methods, why you should not be only aiming at fixed risk to reward ratios like 1 to 2 or 1 to 3, because markets can offer you a lot more. You just need to have a system to grab that.